Welcome to Rich Keys Trading Channel, where we unlock one candle at a time. Please pay attention to the disclaimer on your screen. And with that out of the way, let's get into the charts. Welcome back, traders. Today is the 6th of September, 2025. It's about 8:34 p.m. New York time. And as usual, the markets are closed. Good time to reflect on last week's trading, last week price action, and look at the footprints that was left for us to figure out what next week is going to look like. I would like to start this week's analysis with the dollar index, the DXY. And Dixie, as we have already analyzed from previous weeks, since the month of August, like the first week of August, right down to now, Dixie technically has been in a sideways um, market. It goes up to a resistance level of about 98,300 and drops to a support level of about 97,158. Now, at some point, this sideways price action is going to break, and I think the next coming week is our opportunity to break out of this sideways channel. Next week, I think there is inflation. No, not inflation. Yeah, inflation news. Yes, called CPI. Yep. So next week is the Fed's preferred CPI. Now, already we do know very well that a rate cut based on the Fed watch is on the table. And I think the market is already pricing that in to the dollar. Now, if inflation should come in a little bit hot than expected or hotter than expected, then obviously the chances of a much higher rate cut would be questioned, which could then keep us still in this sideways channel because at some point um, the Fed will have to make a decision. Is it the labor market that is important to them or inflation? And if it becomes stagflation, that is terrible. They could cut rate and cut rate and cut rate. And who knows? Anyway, that's beyond my pay scale. Let's look at the charts now. So yeah, it's sideways channel on the daily chart. Indicators wise, as we look, nothing bullish on RSI. We're still trending around the 50, pointing now towards the lower side. We have a cycle turning down mid-cycle now on that stochastic cycle on the daily. Now, officially, I do have a MACD histogram bar cross below the zero line on the daily chart. All right, everything here is on the daily chart. Because on the weekly, I want us to step quickly to the weekly. The weekly is not giving us much clues. All right, we still have this liquidity sweep going on. We had one, two, three liquidity sweep in a week, 3 weeks in a row. Okay. Price makes its way to the upper bundle, and it's a sell pushing back down to the lower channel. So it just tells me selling pressure is on. And I think based on the daily chart that we just looked at, in the next coming week, we might probably be breaking this lower band. Lower band. The other thing I also want to show on the dollar index is also the daily chart. On the daily chart, go back to the daily. We are in a Bollinger Band squeeze. Okay, so this is the Bollinger Band. Bollinger Band expanded right here. Now right here from about August 28th till now, this is a Bollinger Band squeeze. Okay, it's a very tight squeeze by some of the other tools that I use. And the tighter the squeeze, it means once it breaks out of this squeeze, it's going to be very strong. And I think the break out of this squeeze is not to the upside. That's my thesis at the moment, that our break would be to the downside. And when we do break to the downside, the targets I'm looking at now would be somewhere around here, okay, which is the 96, 96, 626, thereabout, or probably 96, 500. It's a very strong support zone. The reason, another reason is because there's liquidity sitting right here. All right. So all the big players that took a long position here, they probably have their stop loss somewhere here or even somewhere at this level. Okay. And I think if we do calm down, we would be coming into this liquidity zone first. Now, if we do find support here, we may bounce first also to go retest this support that we have currently here. And then from this support, once we get enough rejection, that obviously would bring us to our monthly target area of 95. So that's a ballpark idea of what I'm looking at on the dollar index. Stepping down to the 4 hours to see what our weekly trade bias would give us some more granular levels. So we're already, like I was saying, you can see we've been making lower highs, lower highs, lower highs on the 4 hour setup. This all tells you that as price pushes up, there's selling pressure. Price pushes up, there is selling pressure. Now, obviously, on Friday we did break below the support trend line on the of the channel, which is right about here. Okay, which is 97 191. We broke below it, but obviously we had gone so excessively outside our channel, not just the channel, but the Bollinger Band, that we had a bounce back into the Bollinger Band as well as the KC Band. And I think in the next coming week, this might just go maybe a few hours into Monday, probably Sunday into Monday. We might chop sideways for a minute right about here. I don't expect a complete reversal beyond where we came. So that's my idea that we're just going to probably bounce off this support right about here, and then we're going to break down towards our price target of about 96, 600, thereabout. So that's my thesis. That's my trade idea on the dollar index. Haven't done our analysis on the dollar index. I briefly just want to look at a few forex pairs that goes along with the dollar index. So one of the pairs that I often trade is the Euro USD, and I think as we expecting a breakout on the dollar index, so also I'm expecting a breakout to the upside on Euro USD. Now, if we do break out of this sideways channel on Euro USD, very similar to the dollar index. As a matter of fact, I see it as an inverse image of the dollar index. Then, target wise, we're going to test these liquidity zones right here, which is about 1.18. That's my target on the Euro USD pair. Yes, and on GBP USD, I'm watching closely this head and shoulder pattern that developed a while ago. Um, we did come below this right shoulder slightly in the past week, and so a little caution simply because we came here, but we are bounced straight above, that I guess it was. I guess this whole move was the liquidity hunt. Okay, realizing that there were a lot of stop losses right below the right shoulder, and they just came for liquidity and now pushing it back up. But yes, I'm expecting USD. I mean GBP USD to also break above this resistance, make it to the neckline, and potentially target wise long term, we're looking around 1.37 target on the GBP USD pair. So, in conclusion, I think our trade plan from last week is still active. There's not much to do this week than just sit tight and let the trade play out. The only thing I'm seeing here is this cycle low on my 4 hour system. But again, this goes to support the idea that we might consolidate here, maybe a few hours into Monday, before the move down would occur. By which time we probably would get a mid-cycle high, or we'll probably get a full cycle high. That would bring us down. So I don't have much of a rise target. I probably would think that this was just going to go sideways rather than go further up. But it won't surprise me that we get these candles a lot of times. Price goes to test the upper ranges of the candle, just because price moves so fast that it didn't allow other people to trade within this strength of a candlestick. So maybe we might get a push up to about 97,481, but that's only a doubt. I think we're just going to consolidate here, build enough strength, and break this support level for our journey to our price target right about 96,582. So with that said, I'm concluding today's analysis on the dollar, GBP USD, Euro USD, Forex space. Have a great trading week. Cheers, everybody.